Talis Capital, your value fund in Turkey, charges no management fees, and you have a perfect alignment of interest with your clients where you only charge a performance fee on the money you have made for your clients, which is fantastic and very rare. With respect to how much you're willing to disclose, Matt, for people interested to know more about the investment opportunities in Turkey, and you've already shared an example, but could you share a real life example of an investment and lay out a brief thesis behind that allocation?
Yeah, sure. Yes, that's a good question. The beginning of the question, you're asking a little bit about the operational nature of the fund and I think funds in general. So yes, for both funds, we have a zero management fee share class. And for Peterson, it's for 2 million and up, and we have an exception class. And for Talis, it's all capital, actually. It has a zero management fee. And this is basically modeled after the original Buffett partnership. So Charlie's mentioned at a number of meetings and publicly that this is the fairest business model. This is the fairest way to run a fund where you have a clear alignment of interest. We do not get paid unless we have great returns. And so you can look quite quickly at the Talis returns and you'll recognize we're not earning anything when we have flat performance for 5 years. And so the reason it's so rare is most fund managers don't have the capacity and are unwilling to just operate in this manner. But this is the right way to operate and exist. So unless we make and we have hurdle rates as well. So we have a 5% hurdle rate. We never charge on that each and every year. And we have high watermarks. So if we go down, we cannot double dip and charge on the way back up. We have to be hitting new highs to be charging. So we actually put a lot of obstacles in our path to earn any income. But at the same time, we expect that we will perform quite well over the long period of time, and then we will all do well together. So this is the fairest way to run a fund. There are many funds out there that charge a 2 and 20 sort of allocation, and they're basically charging 2% for managing the portfolio, and they're charging 20% of anything they make return-wise. And in those cases, the fund manager ends up with all the money, and the investor ends up with a lot less of the money. We want to win when our investors win. We want to, we are close with all of our partners, and we want to see them succeed. We want to see their wealth growing, and we want to be moving in the same direction together. So let's see. I mentioned Shishijin. You asked for these examples, and I'll point out it's rare. We find we need to talk a little bit about the Talis portfolio, but it's not always healthy psychologically to do so. So there are biases you introduce when you go out publicly with these positions, but I do want to point out two things. First is that on taliscapital.com, we summarize these businesses in an investment case in each of our reports. So you can actually follow along with the current investment portfolio. Another thing I will mention that we're doing with Talis is they tend to fill up, and they are first and foremost for our investors. But we do these Talis tours where we arrange a tour with a nice Mercedes van. We have it's a very nice event, and we go and we visit 6 or 7 businesses over about 3 days throughout Istanbul, and these tours are really incredible. So we just did one in January.
Very interesting.
We were at places like Anadolu Hayat, which is one of the larger insurance brokers in Turkey. We went to the Coca-Cola bottling company. In the past, we've gone to places like Arçelik and watched them, automate the building of washers and dryers and what they call white goods and ship them all over Europe and even Asia. So these tours are quite interesting. And for me, it's like a highlight of my year. So if any of your viewers would like to join the tour, they just need to reach out to myself from Masoot, and we can fill in them in on some of these details. The space available, we can't fill these boardrooms with more than a dozen or maybe even 10 people. So first and foremost, it goes to the slots go to our partners and our investors. But we do welcome people on those tours. So what is the investment thesis of some of these firms? So look, why don't we just look at Shishijim again for a moment. So global glass manufacturer, one of the top 10 in the world. They're satisfying all these very consistent demands and growing demands. So things like buildings and architecture are moving and shifting as technology allows. They're shifting toward more glass and less, in a way, cement and steel. So people like big, bright buildings, and so that trend is moving in that direction. All sorts of bottling and manufacturing facilities exist, and demand for those products, like if demand for Coca-Cola is increasing, demand for all of those types of goods is also increasing. So we see these trends moving in the right direction in all of the categories that they're operating, and yet they're selling for like this very low 5 or 6 times earnings and just outrageous, bringing in enormous amounts of cash flow. Now, in the past, they haven't always been able to buy back their shares because things like, frankly, in Turkey, having met with many of these managements over years, many are concerned about the impression of stock price manipulation through their buybacks, which to us doesn't make sense, because buybacks are one of the tools that management can use to create or destroy value within the business. And it's not manipulative. If Berkshire is selling for a price close to 1.2 times book or some internal multiple of earnings where they deem it's undervalued, it's the best use of their capital. And the same is true right now for companies like Shishijim. And so when Shishijim or even Coach Holdings, Coach, just such an obvious conglomerate, they start issuing these massive buybacks, a lot of times issuing really high and sustainable dividends. These become very attractive opportunities for us. So Shishijim has a global market. It's just trading on a local firm. Many of its costs are local in a depreciating currency, where its revenues are in the relatively appreciating currency. So hard currency revenue and appreciating currency cost, buybacks in place, a huge, low debt, growing trends in the space, and selling for 6 times earnings. It's like, what's not to like? This company, you could, it would be very difficult to disrupt the movement of Shishijim. It's a global business. It's not a local business. So even if there was something terrible that was happening in the local space in Turkey, Shishijim would continue to operate around the world. And ultimately, the price should reflect that. And it's much more reasonable to have closer to 10 times earnings, and earnings is growing at double-digit rates of return. So, push this out 3 or 4 years. Oh, and share count is declining. Push this out 3 or 4 years, and I think you can have a very, very extraordinary return situation. We may have some years that it's going up 50 or more percent, maybe more in a year.
So much to learn, because I think it's very difficult, as you just mentioned, this 13F in US, but the amount of information we got about Turkey and how you are really thinking about these companies and the tour. especially the buyback manipulation. We are so familiar with these sort of mindsets. It's very interesting, and we are completely forbidden here.
Things are changing.
So,
sorry to interrupt you. I want to point something out. Okay,
no problem.
In these developing markets, some of your viewers may be aware of this. In the Western world, developed markets, I don't think people understand this quite as clearly. There are many aspects of the mentality that is somewhat flawed. So, for example, but the point is that these trends, if they're moving in the right direction, will open up and change the dynamics of how these markets work. So, for example, in a developing world, we all want to see management owning a large share of the company that they're managing because it aligns interest. If we see that Warren Buffett owns 30% of Berkshire Hathaway, we're very pleased with that because it means that we're on the same side as Warren Buffett in this transaction. In Turkey,
absolutely.
It's very uncommon for executives to own shares of their stock. It's viewed as sort of there could be manipulation going on. There's insider dealing going on. When does the management decide to buy their shares? They know more than everybody else. And so it's an unfair advantage. Whereas we look to that as a signal in developing markets because they know more and they're buying their own stock. We like to see that. In Turkey, that mentality is slowly shifting. We would love to see where, they're issuing shares to the employees. So everybody is incentivized to make every aspect of the company better, safer, not have fraud activities going on within the business because everybody's an owner of the business. You're less likely to be incentivized to do something unethical if you own a piece of the business that you're involved with. And so we like these trends that are happening, new buyback trends that we see, some executive ownership trends that we see. We met with and we had to ring the bell at the Bursa Stock Exchange during one of the past tours. And when we were talking with the executives there, they had gone on a national campaign, city by city, to run and inform everyone of the differences of holding periods and investment approaches between the local investor and a foreign investor. And they talked about how foreign investors think long-term. Foreign investors are valuing the business, dividing by the shares outstanding and seeing if it's above or below the actual intrinsic value of what they own. And the locals are treating it much more like a casino. And it's very hard. Even they emphasize it's so hard to break through that mentality. We are close with all these people. We were in Turkey, as I mentioned, in January, and I was talking to this very bright engineer about his own portfolio. This is separate from Thales, and he said, what should I do? I said, you could buy Coach and hold Coach for many years, Coach Holdings. Wide conglomerate. You don't need to hear from me afterward. You just hold on to it. And I ran into him about 3 days later, maybe it was 1 week later, and he was so happy. And he said, I already made 6%. I said, that's wonderful. Just that's not anything. Just wait on it. He said, what do you mean? I already sold it. And so this is the mentality. It's like I make 5% and I exit the market. Whereas foreign mentality is I'm looking for this to go up 5x and it will just be beginning. But these trends in mentality are happening in Turkey. The exchange is trying to educate locals to invest better. Businesses are starting to lean toward maybe stock ownership being a good idea. Buybacks are starting to happen in small areas. But because of the current environment, regime, political environment, the region in the world, it is these opportunities. There's huge opportunities they're trading for, in many cases, 3 times earnings, 4 times earnings. Great businesses trading for 5 times earnings. It's a remarkable opportunity.
True, and I can totally relate to you when you're saying all of this. And as we started with this thought that we are doing this WFA, I mean, this Wise Folks Almanack podcast. One of the prime reason is to educate people on this shift of mind that needs to take place when a country space is actually moving from one place to another, especially the frontier markets like ours. And that is so much resonating to your Turkey experience. I'm really glad that we are doing the right thing, possibly.